Oh, excuse me. Good morning, everyone. It's 8:01 a.m. Chicago time on Tuesday, the 12th of November, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1637 today. The overall sentiment in the market is that we are slightly risk on. We're trading right up against yesterday's highs in the S&P, in the NASDAQ, and in the Russell. And overall allocation looks to be towards risk, although the U.S. Treasury bonds are unchanged and the 10-year notes are down about two big ticks, and gold is down and trading around 1,455. Gold taking a bit of a hit over the last week or so. That's where we stand in the overall picture. Crude oil is again trading its composite point of control area at 57.28. Has turned up, is trading up 42 cents on the December contract, 0.76%. So that's where we stand today. In terms of what's pushing us around, one of the key things we need to keep in mind for today is we did get some numbers earlier from Europe. Great Britain had its claimant count change come out at 33,000 versus 21.3, slightly worse. And the German ZU economic sentiment indicator came in at negative 2.1 versus negative 32.5 expected. This is why the DAX is a leader this morning in the indices. And then at noon Eastern, 11 Central, we get President Trump speaking in New York and is expecting to potentially release remarks that may be market movers. We do have some Fed speakers remaining. Fed's Harker at 1 p.m. and Fed's Kashkari at 6 p.m. And then we have some numbers out of Australia this evening starting at 6:30 p.m. Eastern. So that's where we stand this morning. And again, the theme is the same old stuff. Europe's still waiting for Trump's decision on automobile tariffs, and there hasn't been much progress in the U.S.-China trade war. So that's where we stand. Let's take a look at what we expected yesterday. The primary scenario was for responsive buying into 85, 86, the stock zone at 86 and a quarter. And the expectation is for it to fall off from there and go sideways. Expected an inside day on scenario one. Scenario two is a potential for a test lower, to test the low below the MC point of control at 73 and a quarter and get down beneath 72 and a half, at which point I expected some buying to come in and take us back up towards 85. Kind of both of those worked, and neither one worked really. So we had an inside day. So the high of the prior session, let me change the color. The high of the prior session, of course, was not breached. It's up here at 92.50, the high of the week, and the low was not breached either. We never tested below, but we were responsive and pushed into the point of control initially. Rotated from the point of control, had 3 points from there. And then we had range extension up and we pushed into the next key area, which is that 86, 87 area. The stock zone was 86 and a quarter as mentioned. The high is 88. So we ended up pushing into this key area. This is a composite low volume node. Let's take a look at that in a kind of a bigger picture. Here's what we have. Let's extend this profile forward and see how it fills in. You see it filling in higher and higher. We're shifting the low volume node on the MCLVN. If you look here, you'll see that there's no volume there. That price was 87. And as the day wears on, you could see it starting to fill in a little bit into the session. The next key area up is 92. Actually, the high of last week was 97, not 92 and a half. The next big area to test is the 92, and it's likely that we're heading there today as we clear the low volume node. That's how things are setting up so far. Inside day on a Monday. It was a holiday. Yesterday's volume was 604,000, which is about 500,000 or almost 40% off of what we would consider to be the common or expected value. And it was about 25% off of the prior day, be it having it be the Armistice Day and Veterans Day and so on. Holiday, the volumes were off as expected. Surprisingly, yesterday was not a sideways holiday kind of trade. We ended up yesterday having what looks like a pretty bizarre profile, a very big box with very distinct edges at 80 and 87. And we're trading above at 80, 89, 88 half right now, right above yesterday's range. So we may be opening out of range just above, but inside of the range of last Friday. So the expectation is likely to push higher. That's the way it's setting up. Looking at the overnight, this is the composite. This is interesting, actually. I wanted to show you the composite this morning. I thickened that up. I wanted to show you the composite this morning, and this is where my downside bias was coming from. We had the peak day, we had a lower high, and now we're still one-time framing down as long as we don't take out the 92.50, which may happen today. We still may be one-time framing down, and the expectation is we continue to build lower highs, lower lows, lower highs, lower lows back into 50. If you look at the profile right here, this is the composite profile going back to 11/11/2016, November 11, 2016. So 3 years, you could see that there's very little volume between 30.70 and 30.40 or so. The expectation is the market's likely to test this 30.50 area and fill in this gap if it continues lower. It did not do a good job pushing lower yesterday, and it may breach the high this morning, and it looks like it may end the one-time framing down at the open today, which would be bad news for shorts. And so the next target would be 92, and above there 97, and then from there 3,100. So that's how things are looking there. Excuse me. In the overnight session, relatively balanced profile, relatively low volume compared to prior days, in line with what we would consider to be normal in the long range, and overall just a market that has tested into 30.94 and has been sitting sideways. Note that the mid, the blue, the VWAP, the cyan, the point of control, which is maroon here, is right on top of yesterday's close, and right in the middle of the range. Complete balance overnight. I expect it to break one way or the other. We'll see how that goes. Remember the overnight stat. So given where we're opening, the expectation is, again, it is likely to continue higher. That seems to be the path of least resistance. The overnight inventory appears to be balanced in price and in delta. The delta is fairly balanced here at 0. So not much to take away here. Let's take a look at ctbookmap.pro. We're looking at the ES here, and overall we have a very clear outline up at 30.95 and 30.80. Again, these are strike prices, but other than that, we see that it drifted up in the overnight, and overall there's not much to report in terms of liquidity and the process overnight. The overnight market tended to push higher and consolidate sideways, as you already know. with a relatively balanced profile, and there's not much here to take away from the overall depth, except that those big areas 3095 and 3080. Above there, we have a little bit the liquidity that's been resting here at 3100 is relatively gone, with more liquidity coming in at 3102. Again, don't get enticed into trading based on liquidity. If you use CT Bookmap, it's not a good way to trade. What's important is matching up the areas you've identified to do business with. I'll call those stock zones, stock zone areas. And, when that matches up with some size, I have a good portion of the parameters. First, I determine what the market is trying to do, determine the context and the current process in the narrative. Where are we in the story? Then I have already identified the areas the market may test or may see resistance or support. Those are stock zone areas. Those are based on price action, volume profile, and potentially also some stats. And then once those align, once my bias, once the market moves towards a place I want to engage and it's the correct bias, then I'm looking for liquidity to support my trade. As always, and I've said since I came online in 2008 out to the public and spoke openly about how I'm approaching the market, as I've always said, I'm seeking to participate in areas where the market is likely to have a difficult time taking me out. In other words, if there is nothing up here at the last high, I'm not going to look to sell the last high, because it would be very easy for the market to take out that high and run some stops. It's likely a target-rich area in terms of stops, right? That's not a very good. That's not a very good area behind which I can put my stop. I want the market to work hard to get to my stop areas. This gives me an opportunity to be more right than wrong, or right and wrong, right more often than wrong, and then the cost of finding out is our stop loss, right? So that's how I'm seeing things. A little thing I want to show you here. This is my volume scope chart. Again, you can get the software by going to CT Charts Pro. This is Investor RT. You could see that once we dropped into this 3085 quarter area, you could see that we did so on a negative delta. Pretty good play on, pretty good follow through and play on the delta versus price. Price has pulled off a little bit. There was a little bit, the delta finish on that bar is 415, but then it starts to pull back. So assuming I'm looking for, I wasn't here for this, but assuming I'm looking for a short, this is kind of an ideal setup here. Nobody talks about exact setups. This is one right here where we're looking to fade and attempt higher. We're in a stock zone. And then what we've done is we've pushed higher on negative delta, and the bar closes, and I'm looking for any indication that the market is likely to continue lower. So the trade would trigger at the open of the next bar, and then I'm looking for a rotation back into the next zone. So in this situation, this would have happened down here somewhere. The entry short would have happened down here somewhere with a first scale out at 3087 area. And now it's bouncing back up. So it seems to be coming off pretty good here for now, but the open is coming around the corner, and we'll see how that plays out. So that's just, I wanted to throw that in there as an example of what I'm looking for when I'm combining the context, which is informed a lot by not only price action, but the volume profile, combined with defining areas where I expect the market to get a reversal or to test, and then put that together with order flow. And you can use order flow in the form of just reading the tape traditionally, which I think is difficult nowadays, or footprint, volume scope type charts, or looking at the heat map. So that's a summary of how I'm looking at things for those people who are new here. This morning, we're opening above the point of control. We're balanced. I expect it to be a pretty sloshy open. I'm looking for an open auction that actually kind of pushes into the prior range. But overall, I expect that the market is likely to push higher and take out this 3094, test the 3092. The 3092 is this high volume node here. I expect it to hold steady and then potentially push all-time highs into 3100. So overall, the bias currently, given how we performed yesterday and the fact that we are likely to end the one-time framing down, we're likely to see a short squeeze today. The secondaries, of course, the opposite. It's an open auction, so our scenarios are going to be open auction-like. The initial move is likely to be higher into 3092, consolidate, potentially push the overnight high, and then move lower into the range and then push back into the 3082.75 naked point of control, and then hold sideways and steady for the rest of the session. We have to pay attention to what POTUS is saying at 12 Eastern, but overall, this is the expectation, the secondary expectation. The tertiary is an open test down and then failed to push, and we saw that yesterday. This was kind of an open test down and push higher. Similar deal, push down, open test down, impulse higher, drive higher, and then squeeze. And in that case, we would spend little time at 3100 and start pushing towards 3105, 3104 before the rest. And then we hold steady in or around 3100 in that situation. Good luck today. I think I'm doing a Trader Bite tomorrow. I'm supposed to be in a TV studio recording with Anthony Crudelli for his show. I'll be talking about losses in a trader mindset session, but I expect to be here for the Trader Bite. If that changes, I'll announce that on Twitter. One last thing, I did a petition, a public petition on change.org that I'd like all of you to sign. I'm going to put it here in the chat box. Please take a moment to sign it. It's a petition to get the micro crude contract, which is the next natural product that we need a micro in. Please participate. Please include your information so that I can present it to the CME as a way to push forward. The CME is about a block from my office, and I do have some contacts there that do have influence, and I'm hoping to get a couple thousand signatures or so. Please take the link and pass it around to your Skype group, chat rooms, forums, wherever, and get people to sign it so we can get that product released. Good luck.